Hello, friends. Welcome to the Weekend Investing Stock Market Weekly Review for the week ending 7th of March. For this week, from our research desk, we had all these fantastic content pieces about seasonality of gold, how money in the bank is losing ground, how exits are extremely crucial, trends being your friend. Is it the end of the FNO euphoria? Let the drawdowns not scare you. Gold again, your safety net. Momentum is pervasive. Make sure that you can save your capital and momentum score update of 7th March. So all these superb insights have been put on place either on the web, at the website, in the blogs, in the daily newsletters, on the Weekend Investing app. You can see it virtually everywhere. Uh, Disclaimer, please do read the disclaimer fully. This is for your own safety and benefit. And of course, please subscribe to the channel if you haven't so far. That is a big motivation for me and my team. Nifty this week, um, if you had asked me last week whether I would be expecting a 1.9% week, I would have said possibly not, because every week we have been going down since October virtually with only sporadic rises, and hence the bias in the mind is downward. Having said that, the last 5 months have been on the downtick, and that's a rarity that happens. So the fact that we almost came to this, whenever there will be a range in which the Nifty has spent a lot of time, like this was 2024 first half, and we spent a lot of time in 22 to 22,800, let's say. The markets will not be able to break that support so easily. It will at least, you know, test it, retest it, and then perhaps if it has to go down, it will. But these areas of congestion, prior pivotal bottoms, these are important points where the market will at least pause. For instance, this first fall, this bottom that we made, there was a sort of a pause here before we went down. So that's the kind of a thing that is usually going to happen. But 5 months in a row, 5 months in a row we were down, and sixth month I had mentioned beginning of March. It is very likely that March is not going to be red, even if we are in a longer term bear move this year. March is not likely to be in the red because 6 months in a row is an extreme rarity, and that is unlikely to happen. So we are doing well in March. First week of March has done well. Let's hope that the next 3 weeks will also do well. Of course, there is going to be some outflow in terms of advance tax, so liquidity is going to reduce. But the RBI is pumping in liquidity, so hopefully that will not be the case. Um, and and people are finding the current level to be somewhat attractive by whichever way and means they look at the market. S&P 500 is down 3.1% this week, so this is the big change that has happened. If you see, let's go back to this. This is where Trump coming into office was kind of confirmed, and that's what India has done so far. In the US market, the same point was right here where we are now. So the entire Trump rally of the US market has been nullified. We are of course down, but even the US market has gained nothing since it was evident that Trump is coming in. So all the gains that have been made post that, and that it wasn't too so much on the US markets, but nevertheless, the Trump rally basically has phased out. The dollar index, which had gone up on Trump coming in, has come off. Tesla stock, which had gone up from 350 to 500 something, is below 300. Uh, Many of the trades that happened due to Trump coming in have completely got washed out. Even Bitcoin went from I think 85,000 to 109 and is now back at 86, 87,000. So the entire discounting of Trump coming into office is done with. And now I think even the White House is feeling the shivers of what actions they are taking, and they're it is on a daily basis. While we see new executive orders, we are also seeing rollbacks or postponement of things. So the local hit that they're going to get because of inflation, because of supply chain disruption, etc., is going to get very, very evident in the coming weeks and months, and that possibly is going to at least stop this one way flow of money into the US, and that will help emerging markets. That is my sort of guess here. Gold in rupee terms had a great week, 1.39% up this week. We are at 86,000, closed at all-time highs virtually. There's no point. There's no currently. There's no issue in the gold trend. Gold is extremely strong, and do look at gold as an allocation to your portfolio. Don't look at it as a trading instrument. Allocate certain portion of your portfolio to gold, and you'll find that your overall investment journey becomes very, very smooth. Dollar index, as I was mentioning, is getting slammed down hard. So this is where it started out end of September. It's not yet come back to where it was, but it is coming down very, very rapidly now, and that is a good sign for India, I would believe. Benchmark and sectoral indices performance across different time frames. So let's look at different indices. Uh, for the last 1 week, Nifty small cap 250 has clocked 5.5%. Very good run. Nifty next 50, which is this year is behaving like small caps, up 4.9%. Mid caps 3%. Nifty 500 2.8%, and Nifty 1.93%. Very, very satisfactory uh, move this week. For the last, let's say, 3 months now, we are still down very big on small caps, 20.3%, 8.6% on Nifty. So the 3 month performance is really bad so far. 6 months is also equally bad. Nifty next 50 down 20%. And 1 year his performance is now getting to be just about even. So Nifty is flat, Nifty 500 is flat, Nifty mid cap is 1.64, Nifty next 50 small caps are down slightly. That's where the indices are standing. In the Nifty sectoral overview, this week defense sector was up 10.7%, metals 8.6, public sector enterprise 7.4, media 7, commodities 6, central public sector enterprise 6.1, energy, oil and gas, PSU banks all doing 5% or more, 5 to 10% range in these pockets. Autos muted 2.5, FMCG muted 2.4, real estate also muted, IT 1.4, not good at all. Capital markets still down. So I think for markets to come back up very strongly, you will see capital market segment come up very rapidly, which is not happening yet. Banks have completely gone into some sort of a cold storage. So banks are neither moving up nor moving down, and they are a significant part of the index. So maybe that's a good thing. A significant part of your index is not moving up or down. So at least it is giving some counterbalance to the down move at least. Uh, that's where we are on the Nifty sectors. On the Nifty momentum sectoral ranking, metals are at the top now. So you can see across different frequencies, metals are at the top. Financial services have dropped very recently in the last 1 week, but they were rolling very hard at the top. Commodities have come back. Commodities are in fine fettle. Tourism has gone down. Private banks are slipping. Defense, you can see this week was up, but in the last 1 to 6 months, not done well. Um, Public sector enterprise has come back a little bit, both PSE and CPSE. And energy stocks are making a comeback. You can see right here, after a drubbing over a longer term, they are making a comeback. So some color to where sectors are standing can be made out of this. Drop from 52-week high stats. This is a new statistic that we've added recently. Um, so Nifty 50, there are, most of the bulk of the stocks are between 10 and 30% drop from the top. So about 70% stocks are in this area. Only 12% stocks are less than 10% drop from 52-week high. And there's no stock which has gone more than 50% drop from the high on the Nifty chart. Uh, Compared to, let's say, small cap 250, where only 3% stocks are in 0 to minus 10% range, and bulk of the stocks are actually about 55 to 56% stocks are in the 30 to 50% range, which are very steep falls. And if I were to include this, then pretty much uh, almost 75% stocks are 20 to 50% down. So if your portfolio is down and you're holding small caps or mid caps. Actually, most of the market caps are doing similarly. Only Nifty is a bit different from others. It's very surprising that Nifty Next 50 is also having similar characteristics. In fact, 30 to 40% range is the highest in Nifty Next 50. So Nifty Next 50 has got the most drubbing in terms of 30 to 40% stocks down. So 46% here, 16 percent here, so that's 62%, and 2% here. 64% are down, 30% or more in Nifty Next 50 large caps, which is phenomenal drops actually. So what also I'm seeing is that a lot of people are just watching the drop from 52-week high. I would also want to see, what is the, let's say, a 3 5 year gain from where these stocks were, or these indices or sectors were. If you see long term ranges, we are doing some reversion to the mean kind of a move, where I think Nifty is still above its long-term historical, average returns over a 5 year period. I think we are somewhere near 14% right now. And let's go back check this. I think if I have it in the numbers here. Um, yeah, 5 year. So 5 year is 15%, which is about 3% more than long-term average. So despite this fall, we are still ruling above the historical averages. On a 3 year basis, we are more near the historical averages. So we are getting there. But if you see mid cap, small cap, 20 21% on 3 year, and 25, we are still much above the long-term averages. So this correction that is happening, I would say that don't just see 52-week drops. That is not the only metric to judge where we are, but also the fact that we went from here to there, and now we have come back to some reality. So that's actually, everything is about the way you will see the market, the way you will see the numbers. With what rationality do you judge where you are? That I think is very important. Just seeing that if a stock went from 100 to 1000, and it, for whatever reason, it went there and it's now down to 200, then you can either say that you've dropped 80%, or you can say that I've doubled my money in the last 5 years. And also, there's a very big psychological aspect to it. We've done this many times. Two friends, one friend going from 100 to 200 over 5 years is extremely happy. The other friend goes from 100 to 500 and then drops to 200. He's extremely unhappy. Both have started the same point, both have ended at the same point, but the second friend is extremely unhappy because he has seen 500 on the portfolio. So it is all a psychological game. I mean, if market had not gone up as much and had gradually come to where we are today, all of us would be much more happier. But because we have seen a much higher point, and hence we feel entitled that that was my portfolio value, why should it be this now? So it is, I mean, you have to train your mind to think rationally, and once you do that, you'll not feel so bad. How many stocks are outperforming or underperforming the CNX 500? Now let's see this. 500 stocks in CNX 500. Uh, Current drop from 52-week high is 19%. Average drop from 52-week high is 32%. Stronger than benchmark is 81 stocks. Only 16% have performed better than the benchmark in terms of 52-week highs. Um, Stocks that have dropped 3 times more than benchmark is 3%, 2 times more than benchmark is 32%. So significant number of stocks have underperformed, and hence we need to try and find value of those stocks, not value, the selection of those stocks which have outperformed the benchmark, and stay with that strength of that sector or stock. Trends are, uh, let's say, 200-day moving average is 13%. Stocks are above 200-day moving average on the top 500 stocks, which is pathetically low, but it is better than 9% of last week. 16% above 50-day moving average, which is getting better than 6% a couple of weeks back. So the averages are starting to move up. Maybe we are at some point here. Hopefully we get this. Let's see where we go on this. Trend check on benchmark indices. 200 DMA, we have 20% or less than stocks, or less than 20% stocks in almost all indices which are above 200 DMA. So the market remains in extreme uh, beaten down state, where in some indices 10% stocks are above 200 DMA. So everything is below 200 DMA, and below 200 DMA you can say that the market is dead right now. Nifty is probably the best candidate amongst all these. If we look at shorter term moving averages, let's say move 50-day moving average, here again, besides Nifty, I mean, all the other indices are completely dead right now. So very, very stock specific, 10-15% of stocks on the indices are actually moving up. Within the sectors, if we see 200 moving average, you will see financial services still has 40% stocks above the 200 DMA. IT has 30%, which has reduced actually. Services 26%, and everything else is below 20%. And there are some sectors where no stock is above 200 day DMA, which tells you the beaten down state of those sectors. On the very short term, SMA 50, you still have metals doing well. So metals have recently, this last week come up. Metals and commodities seem to be picking up. Financial services, private banks, energy services, PSCs, these also have some stocks which are above 50-day moving average. But again, there are many sectors where the number is very, very poor in terms of 50-day moving average. The strength and weakness basis the moving averages, 50-day moving average, more than 200-day moving average, golden cross is 21% on CNX 500, which is improving now. Absolute strength, price greater than 25, greater than 50, greater than 200 DMA is 3%, which is very poor. Death cross, which is 50-day moving average, less than 200-day moving average, is 79% stocks are currently in death cross, which is very, very poor. And absolute weakness is there in 50% of stocks where price is less than 25 DMA. So this number needs to really change. In fact, flip around to have a healthy market. Right now, we are completely in an ambushed market, so as to say. FII data for this week remains negative, although if one were to read into this, it is getting lesser and lesser in the last five sessions. We were at 11,000 crores, then before 4,700 crores, 3,400, 2,900, 2,300. So there is some reducing trend on FII selling. Let's hope we see some green also soon. DIIs also, there is a reducing counter buying, reducing in 8,000 crores, 4,800 crores, 3,300 crores, 1,600 crores, but overall reasonably sound in terms of the numbers that are coming in. 77,858 crores is what DIIs have brought in the last 1 month, and FIIs have taken out 72,000 crores. So very evenly matched, and there's a nice counterbalance to FII flow in our markets. So this is all I have for this week's weekly update. Thank you so much for watching this. Do let us know your comments on this. Do let us know how we can improve this. If you don't like certain segments, do let us know. Your feedback is very important. Of course, please do subscribe to the channel. Thank you. Bye.